it's Adil bringing you a inter-market analysis view of the FTSE 100 and European indices. I'll try and do a US market wrap-up as well after this, but first of all let's try and tackle the actual European and UK markets. Okay, so basically we've had a substantial sell-off, as you can see. I mean, the FTSE was down almost 200 points at one time. I think we went to hit a low of 67 or 6690 region. Okay, so the Euro stocks obviously hit, the CAC hit, although the DAX obviously was hit but did manage to bounce back. Pretty impressive still though, given the fact that the DAX certainly stayed afloat, and the IBEX was down. The Athens market was surprisingly more or less flat on the day. The MySex obviously down quite substantially because emerging markets are getting hit with regards to the rise in the dollar. So, and the Dow obviously down quite substantially today, almost 300 odd points. The Nasdaq was down, and that's basically where we are. Okay, so the FTSE. Okay, what caused the sell-off? What was the reason for the sell-off? Etc. 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 Okay, so first of all, you had Greece concerns. Asian markets obviously down overnight, and given the fact that the whole concern stemmed from a well, basically a fear of a rate rise. Okay, so that's basically where it all started off from, the fear of a rate rise, and obviously the dollar itself spiking. Let's just have a look at the dollar itself. The chart of the US dollar certainly has made a new high today, and certainly does seem to be topping out at the moment though, but again we'll certainly observe that and see how that plays out. Okay, for now just follow these pivot lows here, okay, and we'll see exactly what transpires. Okay, so given the fact that we've got uncertainty over Greece, although the latest news that Greece gets breathing space with 550 million euro lifeline, but basically there's uncertainty over Greece, and Greece certainly seems to have come back into the limelight again. Obviously a rising dollar doesn't help the equity market either, so that's another factor, okay, at play. So rising dollar or fear of a rate rise in the US certainly seems to be underpinning the reason why the markets obviously are selling off quite substantially. Other than that, obviously given the fact that the Asian markets were down overnight as well, although the Chinese inflation data did come out slightly better than expected, so one could argue that stimulus argument is certainly weakened. But given the fact that Apple iWatch and the basically the euphoria of the iWatch certainly did keep the markets afloat with regards to the Nasdaq, given the fact that the Nasdaq had put in a potential base around the 400 level, and obviously gave all that up today. So interesting times. Okay, so the markets are obviously sold off now. One of the reasons you could state with regards to the market selling off quite substantially was the H&S formation on the S&P 500. Obviously we'd pull back given the fact that we've got lower lows and lower highs, and the US markets were dictating the weakness. Okay, we're dictating the weakness, so that's certainly an argument that one can make with regards to the US markets, and obviously the markets continue to sell off thereafter. Now there is obviously a rumour going around, or there was a rumour going around with regards to a 10% correction given the rise in the dollar, and given the fact that the actual rate increase is going to happen not once but twice this year, and that will obviously cause markets, so US markets, to correct by 10%. Again, I'm not sure whether there's obviously much weight to that argument, but having said that, the price action is what dictates, and you can see here we've had quite a substantial sell-off and stronger volume, or higher volume. And we are testing this key trend line at present. Obviously we are approaching where we hit the 50% and failed to hold that. We failed to hold previous resistance equals support, and now we seem to be potentially, well, basically in no man's land really. That's where we are at this very moment in time, no man's land. So we'll see exactly how that transpires. So with regards to the FTSE 100, so this key trend line obviously has been negated on the daily chart, which certainly is vulnerable. The weekly chart, obviously you can see this is basically where we are on the FTSE 100, obviously, and that's approaching that key trend line there as well. Okay, 60-minute chart with regards to the FTSE. Oh, sorry, this is the S&P 500. I need to go to the FTSE, don't I? Okay, so FTSE 100, the obviously volatility index is now coming into resistance. Therefore, FTSE should technically be coming into support. This was a real conundrum. Given the QE, I had expected. I mean, initially, yes, I did expect. I was short this morning, so I was short FTSE, short CAC. Closed my shorts, and then obviously I switched to long because, given that QE was announced, or basically formally announced, and obviously in motion yesterday, I was expecting this to obviously potentially move lower, given the fact that QE obviously is dictating sentiment and everybody wants to buy the dip. Obviously that didn't occur. The market reversed powerfully in a stronger dollar. So that's basically what the crux of the situation is, because if you look at the actual oil and gas sector and you look at the mining sector, they were one of the biggest hit or worst hit. Basically, if you go to the FTSE 100, and as you can see here, the bottom performers, you can see BG Group, Tullow, Antofagasta, Anglo American, Royal Dutch Shell, BP, Royal Dutch, Fresnillo, BP. I mean, in the bottom performers, they're all basically commodities. So it was a commodity-led sell-off. Although oil price did manage to hold the $48 and gold 1160, and copper certainly did potentially keep in there around the 263 level, but it was all about commodities. So it was a commodity-led sell-off, and as we all know, the inverse relationship between commodities and dollar, that's basically the situation you find yourselves in. Okay, hence the reason why the FTSE was absolutely obliterated today. Okay, so now that we are into this potential resistance on the volatility index, therefore expect a reversal in the opposite direction of the FTSE 100. Let's bring the chart of the FTSE 100 now, given the fact that the S&P 500 has completed this H&S formation. Now, not only has the S&P completed this H&S formation, so I'll just bring this up and show you and demonstrate, because in technical analysis, whenever a pattern is completed, you get a short squeeze in the opposite direction. So H&S formation has been completed at 2050. Obviously, we've dipped below. We are into this support zone around the 2041. For now on the 60-minute chart. If you look at the Nasdaq as well, if you look at a 60-minute chart of the Nasdaq, that also has completed this H&S formation at 43.73. Obviously has dipped below and failed to hold the 200 MA and the gap fill level as well. Okay, so that's basically where we are. If you look at a daily chart of the Nasdaq, you know that its previous resistance equals support in this zone around the 43.20, 43.30 level. So this will act as solid support. Okay, going forward. Now, let's go back to the FTSE 100 now, because it's important that you understand those two indices in order to understand the FTSE. The FTSE itself approaching its 200 MA, which is at 6690, so therefore that will be a solid support. Okay, we have this level here, which is 6640 or 6650. So again, that's another level. That's certainly a buying opportunity. Okay, obviously we failed to hold this key trend line, so I'll get rid of that now. It's been invalidated in the daily chart. Okay. And that's basically where we find ourselves in at this very moment in time. The 200 MA is going to be the key pivot. Okay, obviously you've got this level here, but that's obviously rallied right through, so it hasn't respected it at all. So a 60-minute chart of the FTSE 100. Okay, I mean, this is one hell of a sell-off. I mean, I actually attempted to buy the market around the 6741 level today. I got stopped out very quickly at around the 6708. Okay, so certainly no taking no prisoners at the FTSE 100. This is one hell of a sell-off. Okay, so we certainly seem to be in no man's land at the moment on the FTSE 100 on the 60-minute chart, which is quite strange. You've got potential support here. You have potential support here. Obviously, this is pretty. They're the only two areas on the 60-minute chart that I can find any type of resistance. So one hell of a move. Okay, 7-minute chart. Obviously, we're making lower lows and lower highs. You want to see some sort of base. I did expect this market to certainly. I mean, obviously, once we failed to hold the 6760 level, expecting the 6740 region to potentially hold and make a move higher, but even then that failed. So very impressive sell-off. Okay. The FTSE 100, the FTSE 350, again, you are coming into previous resistance equals support, so that certainly needs to be taken into account. Okay, obviously we made new highs and obviously reversed quite substantially, so again, that's going to be very interesting going forward. The FTSE 250, one hell of a sell-off. We've broken out this channel now, safe to say, and certainly is vulnerable to potential further selling. Okay, for the FTSE 250 for now. But again, it's all about the 200 MA on the FTSE 100, so my eyes would be all on the 200 MA. If we hold that 6690 level on the 200 MA on the daily chart, then the FTSE obviously propels higher. If we fail to hold that, then we are testing this next level around the 6640, potentially even lower on the FTSE 100. Okay, so just bear that in mind. Again, 6646 coincides with that diagonal trend line. Okay, with regards to the FTSE 100. Okay, now let's have a look at the German DAX. German DAX, go to a daily chart first of all. Daily chart, obviously we're holding that key trend line, so it looks bullish for now. 60-minute chart, we've just about managed to hold previous resistance equals support, so it looks bullish. 10-minute chart, at the moment, you still have an unfilled gap above around the 11,580 level. We'll see how that transpires, but we certainly came off the lows quite, with ferocity. So that's generally a good sign. We'll see exactly how that transpires given the US market close, and that needs to be digested. Now the French CAC itself, if you look at the daily chart, you are obviously finding some type of exhaustion or reversal. 60-minute chart, you have got horizontal support around the 4860 and obviously a 200 MA below, so that certainly needs to be respected. The 10-minute chart again is building a base around the 4870 level. 4870 level, we're building a base, so that certainly needs to be respected, and obviously looking for a higher high and higher low from here. Okay, so overall European markets certainly seem to be coming into potential support. The FTSE support as well on the 200 MA. Watch out for that 6690 on the FTSE, and that should dictate sentiment in Europe. If that holds, markets bullish. If it fails, markets bearish. Wax on, wax off. Risk on, risk off. Goodbye now, folks.